Welcome back. You're watching Big Deal, and I'm speaking to Debasis as well as Samir, who are working on the IPO market and taking advantage of the boom that we are seeing in this particular segment of your business, gentlemen. So one question, and I did speak to some of the investors, and they think that these days IPO does not leave anything on the table. Gone are the days when you subscribe to an IPO and you think that money will compound and you will get excellent returns in a few years. Who wants to take the lead in answering that question?
Maybe I can take that first. Let me go first. That's not entirely true. If that would have been true, if you see the 4 transactions that we have done this year, I can talk about, let's say, CDSL, for example. This stock, if you see from the listing to now, it's more than 130% up. The other 3 transactions are trading between 25 to 30% up from their issuance level. So it's not true to say that there's no value which is left for the investor while pricing these transactions. Yes, there could be a couple of transactions where it didn't show that sort of a return on listing. But I mean, there are sectors and there are stocks where people need to also understand that you need to hold for a period of time before it starts giving returns.
How much of color is really coming in because of the sector? It's insurance, it will sell, big name, it will sell. Let's not get into the minute details. Is that something that you're seeing currently? And especially because we are seeing a bull run right now where everything is at a higher valuation than otherwise. So how have you been ascribing the valuation drivers for the segment as well? And how are investors reacting to those as well?
Sure. I think we have not seen that kind of exuberance from investors. Investors are still taking a very hard look at the numbers, at the quality of management, especially the governance framework. So if you see this time around, the governance premium is significantly high. And that's why if you see a sector leader, a strong market position, strong governance, are factors which investors are valuing significantly. Right? And as I said, these are industries that have significant potential, and we are still not tapped anywhere near to tapping the real potential. Right? And new industries are getting created in India. So, there is significant interest from the investors, but I don't see people are getting carried away in just ascribing any valuation to the papers.
Do you think same goes for the retail participants as well?
I mean, as all of us understand, the retail and HNI generally track the institutions. And if the kind of subscriptions that the recent IPOs have seen from retail and HNI, they seem to be pretty gung-ho about the IPO story altogether. But I agree with Samir. I mean, when it comes to valuations, it's not that the investors are just investing just based on positioning of a company or just based on the IPO boom that India is seeing. They are definitely doing better homework in terms of reaching to the valuation number before they take their investment decisions.
I think they're also based on the macros. There's a fundamental re-rating of India happening, right? Because the view, say, just for example, the view on inflation a few years back was that it will continue to remain high for a foreseeable future. That view has significantly changed now, and people are really factoring in a significantly lower level of inflation and a benign inflation environment going forward. Now, when that happens, equities suddenly become, more comfortable.
The full basket has been,
everything seems to be walking towards.
Yes, that's exactly what I wanted to understand, because it's painted with the same brush. The economy overall is re-rated upwards, and therefore probably all the companies are looking much better than before. But apart from financial services, it's also the consumption-based, and there are only few sectors which are really participating in this IPO boom. Not every sector is there, also because a large portion of the capital-intensive sectors are debt-laden and they have nothing new activity to come in. But what do you feel about the consumption story, the healthcare story? These are a hit with the investors. So no problem in selling these papers at this point?
I mean, if you see for any economy, first of all, whenever there's such booms, I think financial institutions lead the fundraise, which is what I think currently we are going through. On the next cycle, what we believe is other companies like healthcare, consumers and everything, I mean, if you see the pipeline, there are not big deals from these sectors yet. But if you see the next phase, I'm sure those companies are going to tap the market and are going to get the kind of valuations they're expecting for. If this boom continues as is, with liquidity, with a strong currency, with macro playing out well for India, India being the focus out of all international markets, you actually would see offerings coming from those sectors as well.
Any new sectors that you're working on, pitching for Which are the other sectors of tomorrow? Like insurance was probably thought about, and people were ahead of the curve, and they spoke about insurance really coming in, general insurance coming in after ICICI Pru had happened. So any new sectors that we are really having on our radar for the next wave of IPOs and equity issuances?
Sure. I think in terms of sectors, I think we are seeing two broad themes beyond thing. I think asset management is one sector which we believe now has gained significant scale, and we should see some offerings coming from that sector. Also important to note that India, you created 12 banks in the last 3 years, right? 2 full commercial banks and 10 SFBs. And all of them have a mandate to list within 3 months of operations. So some of them are listed, but some of them, the remaining, will have to necessarily list within a certain period of time. But I think at a broad level, right now the key theme has been towards sectors that exploit the strong macro of India, and sectors which have a very strong play on the retail and consumption side of India.
So that continues.
That's why you've seen banks, insurance, financial services. I think as the micro picks up in the next few years, we should see a strong upsurge in the capital-intensive sectors as well.
How will the micro pick up? Because we aren't seeing any private investments currently, and all the IPO is also not a growth capital, fundraising. It is mostly to give exit to shareholders at these valuations. So where are you seeing the micro pickup really coming from?
I think as the capital creation, as the economy recovers, and you have to bear in mind that we had a significantly long period of economic stagnation where a lot of sectors had fundamental issues. I think as that gets resolved and as there's a fundamental shift in demand, we will see new capital creation happening, right? You're already seeing some offshoots there in the infrastructure sector, for example. So we led the InvIT for IRB, which saw a strong demand.
And we stopped at 2, unfortunately. But yeah, so I think those could really come back.
Exactly.
So, okay, hopes are high on that particular front as well. But at the moment, most IPOs are giving exit to the shareholders. And that's we can call it an IPO boom, but it does not spread a very positive vibe about the overall market as well. But one question that I want to leave it with is the competition in your space. Of course, ECM business is picking up, and you're there to make money out of this particular business as well. But what is it that banks like yours can bring to the table and get into the big boys club?
I think the key factor differentiator is distribution, right? How strong is your distribution franchise, not only in India, as well as overseas. I think the other very important factor is, that companies realize that life as a listed company is very different from life in the private world. And that's where they need banks to handhold them and prepare them over this journey and, help, position their business in a better way. And do all the corrections that are needed as they prepare for a public listing.
Right.
So for Nomura, I think our strategy has been pretty clear. I mean, one, we have never played, and we would never like to play the league table game. So we would always be very selective while choosing our transactions. And there are two sort of aspects to it. Unless we believe that we add value in terms of either bringing in intellectual capital. I think Nomura did the first business trust transactions out of India into Singapore in terms of Religer Health Trust, and that gave us a lot of mileage in terms of understanding the product as a whole. And in fact, we have been extremely involved with the regulators in putting together the framework for this too. So one, that's on the intellectual capital, and two, we believe that we get a differentiated class of investors coming in and looking at it. So for example, if you go during the last round of fundraise, if you go into a territory like Japan, there was a serious sort of awareness in terms of coming and investing into Indian equities. What we have seen in recent times is there's a huge amount of interest coming in from both the institutional part, as in they're looking at India pretty seriously, and they are actually started coming into
so as our pie for IPOs also increase, more papers come in, our pie of the investors have also improved.
That has increased,
and it's much more well diversified also because of the re-rating that India has seen. So thanks, gentlemen, and all the best for future mandates and future IPOs as well. Thanks so much for joining us on Big Deal. So that was a chat with Debasis as well as Samir of Credit Suisse and Nomura. But stay tuned to Big Deal. On the other side, we'll get you a view from Aditya Birla Group. Stay tuned to Big Deal.